Happy New Year. It's January 2nd, 2026. It's a Friday. Market is closed. Settlement is 6,950. 6,950 lines up with last week's low. Just want to keep that in mind. All-time high is 7011. Last time we recorded speaking was we wanted to see if this level 6597.5 was the final buying opportunity of the year. We essentially stopped doing reports there, and ever since then it climbed up. And then from there it kind of just blah 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 through holidays, which is essentially something that I was looking for. The idea was to see if this range here, and this range essentially here would essentially become just chop. And essentially that's what I would still categorize that as. It's still chop to me. Um, but in terms of what's gonna happen this year, if we were bearish, would like to still see all-time highs hit once at least. So let's go through the calendar. We have jolts on Wednesday, NFP next Friday. We have some consumer sentiment and inflation inspection expectations next Friday. So that's something to look out for. I think a couple of people have been calling out January 9th as a key day in terms of position trading. Then we have CPI on the 13th, PPI on the 14th, and then the rate is probably the last week of the month. Yeah, January 28th, last week of the month. It seems like we're not going to cut any more rates. We're probably going to stay steady, but we'll see how that plays out. Recap of how we look at things intraday. The main things that we're looking for is runs of previous session, daily, weekly, monthly, or yearly highs and lows. So for today, it was essentially the afternoon session here. 3 o'clock was right here, and overnight they ran that. By the time start work started, it signaled that it wanted to go higher. You could have maybe done the good old buy blind here and then go up here and cut there. But the real trade for the day was here is 8:30 here, pretty much no action here. No action at 8:30 means that the action is going to start at 9:30. 9:30 is the higher. This is the higher day at 9:30. Those are my two favorite things. Those that's like my one favorite trade ever, is catching the low or high of the day. So for this case, I didn't trade today. I haven't traded all year. I mean not all year. All November, December. But that's my favorite trade right there. Higher day at the right session, preferably 9:30. Takes it and then runs back to contract open. So the narrative now is, do we want to continue from contract open here? Because the contract low here may or would have to be ran probably in February, March, if anything. And that's just looking way, way, way ahead. Not financial advice, just taking on trades. But for now, this is a break and retest of the contract, and we want to see us go hit 7,000 slash all-time high, and see how the year plays out. Um, we have two bubbles apparently, and I also want to note that this is added weekly volume, down close candle, so this is technically a signal lower, but I still want to see all-time high hit first before, if they want to go lower. If they want to go lower, I want to see this hit first before that happens. If not, we'll just see. In terms of this being hit, we would just have to see what the new week opening gap is on Sunday, Monday. Well, apparently we're in two bubbles. An AI bubble, which is clear, and then a credit debt bubble, consumer debt bubble that has been wanting to pop for years. So those are the two things that could pop this year. And if it does pop, 5,000 is one level. We looked at that when the tariff deal started. That could be one level, or the more sensible level would be the 2022 low. 2020 low, I don't think that's ever gonna get hit ever again. So it's between those two lows in terms of if things go up. Um, that's those are the two levels that I'm looking at for the year if that happens. We want to see all-time highs hit first before we want to even think about this really being a bearish opportunity, unless the um the new week opening gap shows us something different. Then we'll have to recalibrate. So yeah, to recap, the PD arrays that we look at primarily is the fair value gaps, obviously, um, key levels and fair value gaps are like the top two PD arrays to look at. Everything else is just noise for us. But essentially, all we're looking at throughout the day is, to recap, we're looking at start work, which is 8 p.m. Midnight true open, which is midnight 12 a.m. Eastern Standard Time. 4 a.m. Overnight settlement, which is essentially 6 a.m. 8:30, which is New York open. Then cash, which is 9:30 open. Then 9:45, which is open interest. Then initial balance, which is 10:30. London close, which is 11. And then the last thing that we're looking at is settlement, which is 4 o'clock every day. What we like to try and look for are settlement to settlement trades. So for this case, it would be higher day / overnight settlement at 6 a.m. Boom, boom, easy work if you're bearish. If you're bullish, you get cooked. But if you're bearish, you get a really good stuff. So trading is essentially 50-50. It will always be 50-50, but the way you trade in your psychology and how you reprice is how you get to 70 to 80%. And then from there, it truly is luck, and you have to be okay with that kind of luck. Nothing really else to look at intraday. I'm gonna go through this one last time so that way you know and understand. This is the higher day. Hits here. This is the candle that hits the higher day right at 9:50. Nonetheless, this becomes a change in state of delivery. If you watch ICT's content, you'll know what that is. This hits the key level / fair value gap / whatever. Regardless, you're looking for a change of state of delivery. Chops around here. 10 o'clock, it's here. Hits it one last time, gives it one more high, breaks here, and doesn't retest at all. So you could have put a limit order here, but you would have missed it. You were better off just, going in blind and saying that that's it, catching it all the way to settlement, or going for this 10:45 trade here and catching that down to contract open once more. Every 30 minutes is a trade, so just know how to reprice, and you should get your good stuff intraday, but primarily for the language in the chat, the language on this channel, we try to be as swing traders as humanly possible. But those are essentially what we're looking at. Not a live streamer or anything like that. So, but I will try to call and put my own analysis down for the day by between 8:30 and 10 o'clock. I want to see what's going on. I'll say something. Usually I'll be saying something during those times. So, yeah, good luck. We have a weekly volume edition here. So we need to see what this new week opening gap is supposed to be. If it's pretty much the same, you want to see this ran and tagged one last time before we start getting any more lows. We do have some. I do have some sort of a bearish sentiment here, but I will try to stay as bullish as humanly can. I will try to gaslight myself into being bullish this year. But I just don't. I just don't feel it in my bones. And lastly, man, I must have deleted it, but we called the top around this candle here. I'm trying to figure out which candle it was. It may have been that candle. No, it was this candle ish that we called as the top. So we want to see essentially if we flush these lows, and then we'll start to consider if we're bearish or not, and then we'll look at fundamentals and all that. So the next rate decision is here. Next rate decision is there, and we will see what it is. I wouldn't be surprised. Just now looking at it now, I wouldn't be surprised if we went lower, chopped again, and then actually worked our way lower for Q2. So stay nimble, Q2. If you're doing things during the day, if you're day trading, then have good risk management. Try to trade micros as much as you can, since that's just better risk management for whatever you have. Especially if you're on prop firms. Prop firms try to make you think that you can get away with trading minis, but you have to be super specific with your risk in terms of trading with minis. You have to be super specific because the risk is nasty. 80 ticks is usually the best form of risk management on both micros and minis. So you have to keep that in mind. You can't overtrade. You can't get FOMO, and even more importantly, you just can't trade every day. You have to take the A plus setups, and like I said earlier, my A plus setups is higher day or lower day. Those are my A plus setups to me. Everything else is kind of iffy for me. Like trying to get London low, it's iffy for me. Trying to get session lows majorly is iffy for me. Hourly lows, everything else is iffy for me. But for me, what I like is trying to catch the high day, the lower day. And if I can't, then I just have to trade in the direction of what I see. And how do I do that? Even though I try not to, what I try to do is put limit orders at hourly opens and see if that's my trade. So for example, this is the open of 8 o'clock. This is 40 ticks. Probably would have been spooked out here, but I probably would have added here. I didn't trade it, but I probably would have been mostly looking at these opens if I were bearish, which I am. I would be looking at those opens as something that I would want to take lower, especially after this is taken, before 8:30, 9:30. This is a decent scalp, but it's not my trade. This is the 5 minute, right? You can always also just trade off the 5 minute, and try not to go on the 1 minute, and stay on the 5 minute. So this is a decent scalp here. Off this open, if you were trying to get this open as a limit order, you would have got wrecked. But this is the best here. You get your 80, you're done for the day. But if you see this being ran and not actually trying to go through, treat this candle as a change in state of delivery. See if it confirms it, and then figure out which PD array you want to take. In this case, it could have just been this, but it just creates a whole block here. It just goes like 10:07 here is just clean as all hell. It breaks out, it takes out this change in state of delivery, this order block essentially, sorry. It takes out this order block and just goes. So you would have had to going blind on this candle here. There's no other candle here aside from this one, but this is more of a gamble candle here. That's hard to trust. So it's either here, here, or here in terms of being good trades, because this is the perfect opportunity at 10:10. This is the perfect opportunity. You can even take this blind at 10:10. One of my other rules is that I just like to just either take it blind right at these levels, like 10, 15, 30, 45, 50, and then the opening of the hour. I like to take those blind and see if I'm right. But yeah, let's have a good year. Let's just have a good year, especially if it turns out to be a crash or whatever it may be. Especially if it's a crash, because we want to load up calls or cash down here or down here. This would be the conservative level to load up cash down here. So yeah, day by day, moment by moment. Watch the. Make sure you're doing your study on the ICT content, because I'm not going to go too in depth here, but just watch month 4 and then understand pretty much the rest of the content, and just keep reading and keep trying to figure out what your trading system is, because you cannot copy anyone else's traded system. This is an art form, and everything is entirely yours. How you view price is not how I view price. Here, I'm going to be showing you how I'm viewing price, and then you should use that to inform what you see. You are free to disagree with me. That's the whole point. You can agree with me or disagree with me. That's the whole point. So keep studying, keep getting reps in, don't get FOMO, stay patient, don't over leverage, don't overtrade, and make money. All right. You have a blessed day.